Good afternoon, everyone, and welcome to the Daily Volatility Box Report for September 4th, 2019. We are TOSindicators.com, home of the Volatility Box. In today's video, we'll spend some time talking about the market on close numbers, how to read them, and what sort of information you can gauge from them. For much of the day, we had absolutely no volatility take place in any of our indice markets that gave us an edge. We didn't have any trade set up in the crude oil futures market either. However, this market on close number gave us two entries in the 30-year bonds in the final hour of the market, and we'll talk a little bit about what the numbers told us, what we knew to expect, and what happened. Thanks to those two trades on the 30-year bonds, we were able to end with both of them being winners, so 100% winning rate, and our profits for the day were $687.50. Now, before we dive into charts, let's take a look at a quick infographic. Headed into the market close today, so the final hour, we started off with the sell side imbalance of minus 800 million, and we had this number a little bit before 1220. So this is a relatively large number, a relatively large sell side imbalance that usually helps us figure out one of two things, or we think one of two things may happen. The first is we may have a deep sell-off into the close, so the final hour is just going to be a bloodbath. Or two is this number is a little bit larger than it should be, and there's quite a lot of spoofers, meaning that this number is inflated, and we actually expect a much smaller sell-side imbalance when the real numbers come out with the final 10 minutes left, or we in fact expect a small buy-side imbalance. We had the sell-side imbalance with 40 minutes left in the market. So what we expected were the indice markets to go down, or if you believed in the correlation between the indice and the bonds markets, which did occur today or was true, we expect the bonds to go up. So this is our first entry. We had an opportunity to go long the bonds where the bonds fell into our volatility box entry lines, and we were able to catch that dip and go long. Then as the real numbers came out at 1250, we actually ended up having a small buy side imbalance. So with the small buy side imbalance, we essentially have expectations reversed. And so that leads us to expect a rally in the S&P, the NASDAQ, the Dow, all the indice markets, and we expect the bonds to have a sell-off. That's exactly what happened here. Again, we had our rally into the bonds where we hit our T1 and our T2, and that essentially then triggered our short in the bonds, where we were then able to catch the move back down. And this gave us both a T1 and a T2. So essentially, as a result of these market on close numbers today, we're able to catch the bond move up, get T1 and T2, then get triggered into our short, and ride the same move back down for another T1 and T2. And those were our two trades today in the bond markets. Let's take a look at the charts to show you exactly how these trades set up. Okay, so here we have a chart of the 30-year bonds plotted, and we'll approach this market the way we approach all of our markets. We have our timeline, and we check to see whether or not price action breached either side of the aggressive volatility box's entry lines in the first hour of the trading that we care to look at. We see here that we very clearly didn't, and that was our sign to continue to use the aggressive volatility box for the rest of the day. Now, as you see, we sort of meandered between these volatility boxes. We didn't really get any sort of edge until those market on close numbers came out, and that's essentially where we had our two trades set up. So if you remember, at 1220, a little bit before, so right around these two candles, is when we had the first number come out of a sell side imbalance, the negative 800. So what we expected is, if you remember, for the bonds to go up. So as this number came out, we had an opportunity to go long the bonds, which gave us our entry with an edge. We had our stop outside of the volatility box, and we expected the bonds to bounce from here. Our stop was 5 ticks outside of the volatility box, and our target, first target, was 5 ticks, which was hit right here, and our second target was at the target line, which was 6 ticks away. Both of those targets were hit, and now at 1250, so essentially these two candles, let's clean this up. So we essentially hit T1 and T2, and we're now looking to see what the real market on close numbers come out to be. We then had these numbers start to look like we were actually going to have a buy-side imbalance. And we had an opportunity to go short since we now expected the S&P markets to rip higher and we expected the bond markets to rip lower. We had the ability to go short once again with an edge, and our stop was 5 ticks outside of the volatility box. Once again, the same target, so 5 ticks, and then 6 ticks for the second target line, both of which we hit, and we had this move where we almost had a W. We looked for the same sort of phenomenon in the indice markets, but we didn't have any sort of entry with an edge there, and so the bonds is really where our focus was. So a quick recap from today's action. We headed into the final hour of the market expecting a sell side imbalance. we started to look for opportunities in the indices markets, but we only had a trade actually set up overlap with the volatility box in the bonds, and that's the trade we took and focused on. When the actual market on close numbers came out, we had a buy side imbalance. And so once again, we were on the hunt for trades in the indices markets. We didn't get any entries there with an edge, but we did get entries on the bonds with an edge. And those were our two trades for today. So hopefully what today's video illustrates is how you can overlap the market on close numbers along with the volatility box edges to help you formulate a trade that has incredibly high probabilities associated with it, and as you can see, end up working out more often than not. We had two trades today that took place, both of which were in the bonds, for a total P&L of $687.50. So now that continues our winning streak to, I believe, a 7-day winning streak from last week. And in a short week where we expect funny things to happen, we'll take that. We look forward to another exciting day of volatility tomorrow. We'll see if we have the same sort of market on close numbers, present more trades into the final hour of the market, and we'll see you tomorrow for another fun day of trading. Take care.